He's running for governor.
No.
I invited him to my event tonight. I don't know.
Okay. Good afternoon, everybody. We're going to give a few minutes for let people to join the webinar, and then we'll get started today. All right, we're starting to get everybody to sign on here, and we'll give it a few minutes to for everybody to get in, and then we'll start our program. Kim McCabe, how did she get in there?
She's been on here.
Yeah, how did she get in here?
I don't know. Somebody paid. Found the letter.
How can you do that then?
Lauren probably shared it.
Oh,
I don't know.
who is she?
She might be with Cynthia,
Oh,
possibly.
all right.
She's,
Maybe
she's a
go on.
long timer.
Yeah. Okay. Give it a couple minutes.
Yeah, let me pull this. To see if Lauren sent me an updated one, did she? Share the screen if you want to start.
Is there a Q&A in there, or is that?
It'll be at the end.
There's one that's listed.
What do you mean? Yes, so they'll be.
Are we going to show up our faces on that?
Hold on 1 second. Give me a minute. Just give us 1 minute while we open the PowerPoint.
Okay.
Mm-hmm.
All right. So welcome, everybody. We're going to have a interactive webinar today regarding all of the COVID resources that are available for small businesses. This is a private event for members of the Reading Terminal Market, and we thank Cindy for putting it together for us and inviting us to talk to you. This is probably our 25th webinar on these topics. Like most of the webinars we give, these things we're presenting today, some of them actually changed today. So you've got up-to-the-minute information on some of the programs that are going to benefit you as a small business owner. My name is Bob Simpson, and I'm the managing partner of Brinker Simpson and Company. We are a regional CPA firm located in Delaware County, and as part of our client base, we take care of several restaurants in the area, some large, some chains, some across the country. But what we found is that many of those restaurants certainly have suffered through the pandemic, and now there's a lot of relief available for them, more programs coming forward as we're meeting today. With me today is Kristen McCabe, and Kristen is the director of our COVID relief group here. Group's grown into 4 people now since there have been so many programs that have come up since last March. We're going to talk today about PPP. PPP loans came out starting in April of 2020 and are still coming out. There are still applications pending for PPP loans. Of course, we're in round 2 of that. We're going to talk about the Employee Retention Credit today, ERC. And especially today, we're going to concentrate on the Restaurant Revitalization Fund, RRF. So we're a bunch of acronyms today.
Hashtag death by acronym.
A death by acronym, that's what we'll call it. But we're going to learn what all those acronyms are. We have a little disclaimer up front. We're not here to give advice. We're simply here to share information that we've become aware of that will help your small business. These webinars started in April of 2020, and they were designed for a few of our clients who may have taken advantage of PPP. Little did we know how large that program would grow and that there would be a second program, and there's talk of a third program, depending on what happens economically going through 2021. So the government isn't done yet giving away money to small businesses that may have been impacted by the pandemic. And we're okay with that. We're small business owners just like you are. We took advantage of a PPP loan. We've been able to get forgiveness on our loan. We were not eligible for other programs. The way it'll work today is if you have questions, there is a Q&A button. Please ask the question in the Q&A. We'll answer them live at the end of the presentation. Typically, we talk for about a half hour to explain the programs that are there. We're going to go through slides that you'll have available to you as we speak, and you'll also have availability for those slides afterwards. This is being recorded, so it will be available for you to look at again and for other members of the market who were not able to come into this program today. If you we do have a website set up just for COVID information. That is www.brinkersimpsoncares.com. If you go into that website, and everybody's welcome to go into the website, it's free. In there will be up-to-the-date information on all of the programs that we just mentioned. And it will also have some examples of things that occurred with our clients and with other companies that we have been involved in about their how they've achieved some credits. But what we're finding out is, look, this information is very fresh. Can you get that off there?
Yep. So I just want to, Cynthia has asked us if you can sign in just to the Q&A. I just want to say that we do have the CARES at Brinker Simpson resource, as Bob just mentioned. Our wonderful Lauren Contino is our marketing director. She's telling me the same thing. So any questions that need to be asked, we will be happy to address. If people are not here, this will be recorded and we will be sharing it so that everyone can make use of the information. And you can reach out to us directly. We will answer whatever questions that you have.
Yeah, we have a email address that is cares@brinkersimpson.com. That is an email address that gets sent right to the COVID team, and we'll get responses back to you within 24 hours and usually pretty instantaneous.
Yes.
We do want to say that there's a tremendous amount of misinformation out there. And there's a tremendous amount of no information out there that we've seen from other advisors. Again, and we'll say we're all amateurs in this because all of these rules are being written and changed as we go forward, and they do change weekly. The RRF program, which had been on the table since January, just came out with an application, a sample application yesterday, and it's pretty rigorous application to complete. There is some pecking order in the RRF that we'll talk about. So here's our agenda. Here's what we're going to go through. We're going to go through the RRF first, since that is probably the hottest topic right now for members of the market.
We did the best we could, and I was not happy about the timing, but I think we covered most of the important information that was released last night.
Yeah, you'll see that this information that we're going to share today actually came out last night. And on Saturday, the blanket application came out finally. The RRF follows a program called SVOG, which is the Save Our Stages Act, which you may have heard of. SVOG was rolled out on April the 8th and failed. The website failed immediately and has not been, the website has not been fixed yet. We know that when the RRF rolls out, it will be at least as busy as the SVOG website, and we suspect that there'll be problems with that as well. And the best thing we can say to you now is we don't know when that rollout date is. I don't think they announced it.
No. And they're going to do a test run with basically a lottery to select a few people to try it out first, which is a good idea.
Yeah.
So next couple of weeks, I don't know.
Yeah, in the next couple of weeks, but we'll follow up with the application. You can grab it from the information today and start working on your applications. There's a lot of information in there about when you started, how many employees you have, all the way down the line. So you want to make sure that application is as complete as possible when this program works. One of the things is we do believe that the funding will be insufficient for this. This is a $28.6 billion program. And really what it does is it gives restaurants money to replenish their gross sales decline in 2019, the gross sales decline in 2020 over the 2019 levels, less any PPP money you get. And if you think it through enough, you went through all of this work to get your PPP loans, which have to be spent 60% on payroll and have certain timelines on them. And had you not received the PPP loan, you would, as a restaurant, we'll call it restaurants now, there's a whole list of who qualifies, you would have gotten this money with many fewer restrictions to it and many fewer spending. So you'll see we'll talk about what, if you're in the process of getting your PPP2 loan, what you should do going forward. And really one of those things that we recommend is if you have not been approved for that loan, you may want to consider pulling that application at this point, because this that PPP would reduce the amount of money that you're going to get from RRF. So we'll go through, we don't want to go through the application today because I think I counted it's 20 pages or so. But we'll be happy to help anybody go through the application once it occurs. But please download it, get a copy of it, and start to fill it out, because it does have a lot of information on there. And it's got some attestations on there that are very important. Remember, this is a federal program. And one of the attestations that you have to make is that all of your answers are true and correct to the best of your knowledge. Please make sure your answers are true and correct. You don't want to get involved in a bad situation here. We've had a couple of clients that have been audited on their PPP loans by the SBA. Luckily for them, all of their audits have been clean and they've gotten their forgiveness. But you want to make sure that you're very careful with your answers. What documentation do you need? Just roll back a slide. So there's a lot of documentation on this list here that you'll need going forward. If you have your tax returns done for 2020, you can use them as documentation for the application. That 2020 sales number compared to the 2019 sales number from your tax returns will represent your decline in sales. If you had an increase in sales in 2020 over 2019, and we did have a company that we had a restaurant that did that, actually had an increase in sales, and they'll get nothing out of this program because it is simply based on refilling your sales coffers for any lost gross revenue. It's a great program. If you're a restaurant owner and you suffered through this, you had to stay open is one of the things that's required here, and there's some bankruptcy issues. If you're in bankruptcy, you have to be careful as to whether or not you'll apply for this. But here's a list of the information that you should have ready once you do your application. One of the other things we want to talk about, you'll see additional documentation for inns, tasting room, brewery, tap room, distilleries, brew pubs, bakeries. You have to make sure that 33% of your sales went to the general public, and that all of your sales weren't for wholesale sales. So if you're a bakery and you're only supplying other bakeries or other stores, you're not selling to the general public. You're a wholesale bakery. You got to make sure that 33% of your sales did go directly to the public. We can move on. Here's your eligible, who's eligible for this. You'll see it's mostly anybody that's in the food and beverage business. They haven't been very discriminating here. Almost anything that's involved in the food business, you'll see the last few have that 33% gross receipts test. That was actually new and just added.
Keep talking. I'm going to close that.
So those are the eligible. So if you're a restaurant, a food stand, a food truck, a food cart, a caterer, a bar, a tap room, a saloon, a lounge, anything that has to do with that, you're going to qualify for this as an eligible entity. What is the amount of money that you can get, or how do you compute it? Here's the calculations on the left. They're very simple calculations. You're talking about gross receipts, which is your sales number. Some restaurants are asking some questions about, do I include sales tax in gross receipts? And the answer is no. Sales tax is not a sales number. It's a pass-through number. Do I include tips in gross receipts? And the answer to that is probably no as well, since tips, as long as they're passed through to employees, wouldn't really constitute gross income. Anybody in Philadelphia that is including tips in their gross income shouldn't be, because you're paying the gross receipts tax to the city based on gross sales. So let's just talk about gross sales or gross receipts of sales to the public. You're comparing the 2019 to the 2020. If you were in business for all of 19 and all of 20, you're comparing the full year of 19 to the full year of 20. And the first thing you compute is whatever that decline in sales are. Let's use a client of mine, for example, had $1 million decrease in sales, and he got $470,000 in 2 PPP loans. So he qualifies for $530,000 grant money from this program. That's what he'll apply for, is the $530,000. He was in business for all of 19, he was in business for all of 20, and his sales went down by $1 million. If you were in business for part of 19 and all of 20, you want to take your average monthly sales from 2019, multiply it by 12, and compare that to the calendar year of 20 to get what your decline would be. And then the third is if you opened your operations between January and March 10th, which is the beginning of the pandemic, applicants that have not opened but have incurred expenses. So you're able to get grant money equal to the eligible expenses between that period of time, less any PPP money that you received. On the right, you'll see the maximum amount is $10 million per business, no more than $5 million per physical location. Again, this is all based on gross sales. Grants will be for a minimum of 1,000 and a maximum of 5 million, not to exceed 10 million. Under the guidance, restaurants with pending PPP loans should withdraw any outstanding PPP application upon applying for the RRF. So if you have not received PPP2 and you're in the process of getting that and you're going to apply under this program, it would mean that you would get the money replacing PPP under this program. Some questions come up with that, and I know that some of our restaurant owners are a little concerned that, number one, the plan runs out of money, which it could. Number two is the timing on when the money is received is if the SVOG situation is any indicator, it could be a real problem for the SBA to facilitate this program because of the demand. So those are concerns. And the other concern is that the PPP application, if it's not in yet or if it's pending, if you're pending, you're okay. You can withdraw it. If it's not in yet, you have a May 31st deadline to get that application in. What you're going to find is a lot of these banks are going to shut down their PPP program before May 31st. So in the beginning of our webinars a year plus ago, we always said, love your banker week. Became love your banker quarter, love your banker year. It's still love your banker. Be very close to your banker. He holds the key to your success here on how quickly they can act on the items that you are trying to get through, especially with the PPP program.
And they have 10 days to give you the money, and they do have some flexibility there to be helpful to their clients. I've seen that in other scenarios, so definitely talk to your banker as you're going through the decision making.
All right, so the next slide says, how can you use the money? And we won't go through the whole thing, but we're really going to say is that you can use the money for any operating expense that's normal for your business to operate. They talk about some kind of expenses that are outside your company. I don't even know what the hell they would be, but they occur outside your day-to-day activities. I don't even know. They don't explain what that means.
Yeah. They're basically allowing anything.
So they're allowing, so there isn't any requirement that says you got to spend a certain percentage on payroll like the PPP program. This requirement just says you got to spend the money by the end of the year on normal operating expenses of your business, including your cost of goods, including your food costs, including your liquor costs if you have them, and including your payroll. So it's very interesting that you get this money and you have to spend it. And some of my restaurant owners are getting very healthy bank accounts through all these programs, very healthy. And their concern is that they would like to take some money out because they, as the owner, hadn't been paid for over a year or so. And it really doesn't allow you to do that through this program. However, if you're operating, you're going to use your RRF money for all of the operating expenses, which allows all your sales from normal course of business to become profit at that point. You can withdraw that profit for your personal money if you need to do that and use the RRF money to pay all of your business expenses. That makes your non-RRF part very profitable. I know there's a lot of rules in Philadelphia that are different than the rules outside of Philadelphia, and I can only say I'm sorry for that. But other restaurants and food businesses in the area are figuring ways to be able to get some of the money out for themselves from the other profit.
Also, but this is definitely going to be better if you're also eligible for ERC, which we will talk about, because you're not limited to the wage to a certain percentage of payroll costs by this, which is helpful to restaurants.
All right, so there were a lot of questions on PPP and what it is. We're going to talk about PPP too. It's a program that's kind of dying on the vine right now because we are coming down to the limit. It is running out of money. It hasn't run out yet, but it is running out of money. The deadline is May 31st if you haven't applied yet, and that was just extended from March 31st. And it took an act of Congress to really extend that deadline. So I don't see another extension in that program, but what I do see is the potential that after July the 1st, there could be another program out there. Let's face it, restaurants are being reimbursed because they were shut down by government action. Let's call it what it is. Restaurants in states that weren't closed, that maintained their level of sales, they're not getting any money out of this program. But restaurants in states like PA, who were closed down by the government, are now getting reimbursed by the federal government for the injuries caused by the state closures. That's what this program is all about, the RRF. The PPP program was there to get all small businesses back on their feet with some certain requirements that you had to spend the money within a certain time frame and you had to spend a certain percentage on payroll. Those rules don't change. They're the same for the PPP2 loan. If you have a small loan under 150, the application is a one-pager. You don't have to provide any support with the application. Some banks are busting chops, and they're making you provide documentation with the application, which is really their choice. If that bank is yours and that's what they're doing to you, I would call them out on it, because there are many banks in the area here that are very PPP friendly. And if your bank is not, please contact us, because we will put you in touch with bankers that are really making this process as easy as it should be for small loans. You can pick a period from 8 to 24 weeks. Most companies are going to pick 24 weeks to get forgiveness. Make sure you still spend 60% of your PPP money on payroll and related payroll costs, and the other 40% can be spent on a myriad of expenses. You can ask us what those expenses are. In the beginning, it was rent, utilities, a few items. Now that list has really expanded, and included in that list is your cost of sales.
I just want to add one caveat that I thought I had addressed in the slides, but I didn't. The forgiveness requirements for the $0 to $50,000 PPP loans do not have to meet the FTE and the salary reduction tests, but they'll be the 50 to 150. You have to meet those requirements, but you have to submit no documentation with it. You'll initial 2 times, give the amount of your payroll costs, and hit submit. If you're struggling with the 3508S and your loan is under $150,000, please reach out, because it should not be. They really did make it a simple process.
All right, so this is all second draw stuff. We'll go down to the bottom. Your eligibility, you must have received the first loan. It doesn't have to have been forgiven yet. Can't have more than 300 employees, and you must demonstrate a 25% reduction in gross receipts between a calendar quarter of 2020 versus that same quarter of 2019. So if you're down 25% in one quarter, you qualify for PPP2. Doesn't matter what you did in the rest of the quarters. Let's move on. Yeah, let's move on.
There's a lot of information here, so if something's confusing, just ask in the Q&A, and you'll probably get more benefit that way.
All right, you do need documentation to show that you're down the 25%. It could be tax returns, it can be financial statements, they can be audited, they can be unaudited. You can use internal sales records, you can use point of sale records, you can use bank statements, but whatever it is that you use, you've got to support that 25% decline in order to qualify for this loan. If you have your 2020 tax return done and it's down by 25% over 2019, then you automatically qualify. And I would assume that most of the food businesses in here are going to qualify for this.
This is probably not.
Yeah, we'll just peel through this. This is really a rehash of what we talked about. We just want to bring up a little topic here, a little bit off topic, but very important. This is the Leave Act that was extended in 2021. If you recall, if you had employees who were sick, or they had sick family members, or they had to stay home with their kids because there was no child care or schools were closed in 2020, they could get up to 10 paid days. You pay them as an employer, and the government would reimburse you those 10 days of payroll up to certain limits. We used it extensively in our firm here for the people who qualified for that. That program went away at the end of the calendar year, but now it was just brought back starting April 1st. And the 10 days is refilled starting April 1st. The difference is in 2021, the program is voluntary. So you as an employer voluntarily participate in the program, and you tell your employees that we have voluntarily done it, and we've actually had people who have used the program already. There are a couple of added qualifiers to this. So if you're being tested for COVID and you're out of work, if you have a bad reaction to a COVID vaccine, if you're out of work for those issues, you also can qualify under this program. It's a very tricky program, and we found that many companies don't even know it exists, yet their employees are out and sick. So you reset the bank, it starts again. All right, let's talk about ERC. We're going to go to Employee Retention Credit, which is another very, very confusing tax credit. And here on the first page, we'll talk about it. The ERC allows businesses to take a credit of $5,000 per employee for 2020. That's a one per year, $5,000, or $7,000 per employee per quarter for 2021 against certain payroll taxes. The ERC, Employee Retention Credit, when it came out, was only good for the first and second quarter of 2021. However, the ARPA program that came out in March extends the ERC for all quarters of 2021. So if you do it right and you have your employees set right, $7,000 per employee per quarter for 2021 is $28,000 that you're eligible in a tax credit per employee. It's first used to offset tax payments that you make on your 941 taxes, but any excess that you have can be refunded to you by the IRS, and it will be wired to bank accounts. We have done applications for our clients to get this money back for the first quarter of this year. First quarter is over. You're going to know if you qualify or not, because you're going to know what you're qualifying and what your sales are.
And if you qualify in quarter one, you qualify for quarter one and quarter two.
Yes.
So
what is the program? Again, it's $14,000 maximum credit potential, which was $7,000 per quarter for 2 quarters, is now $28,000 per employee. So an employee who makes $10,000 a quarter can get a $28,000 tax rebate to the company, not to them, to the company by the IRS. We'll refund the money directly into your bank account. We have some clients that are in the 7-figure refund claims right now. You could go back. Do we get into this? Okay, these are the 3 changes that happened. Recovery startup businesses, you'll see, are now eligible for this up to a $50,000 amount. And then if you're a 90% reduction in sales company, you also have additional eligibility under this program.
Do you think it would be helpful if I showed the chart and you could just generally speak
let's
about
show
the
the chart. We'll
changes?
show you.
Yeah, I think this program started with the CARES Act. It was changed with the bill that passed in December, and then recently changed with the American Rescue Plan. So each change impacted what you are eligible for and how much you can get. So we want to make sure you understand the maximum benefit available.
And we'll pay attention to this chart. It explains all that. But right now we're dealing with the ARPA program in this. So let's talk about the CARES Act first. Originally, if you got PPP money, you were not eligible for this program. However, that changed. So any company that got PPP money that qualifies for the program can go back to 2019 or to 2020 and change their 941 taxes for whatever quarter they qualify in 2020. Here are the qualifications. So you had to have a 50% decline in sales in a quarter. In 1 quarter of 2020 over 2019, that makes you qualify for that quarter and the subsequent quarter. So if you had a 50% decline, you can go back and retroactively ask for this refund. Remember, in 2020, the credit is $5,000 per employee per year. It's 50% of the first $10,000 that you pay them in the quarter where you qualify. So if you had a great first quarter, which is what a lot of restaurants did, then you had a terrible second quarter, you'll qualify for at least the second and the third quarter. In the restaurant business, since not only do you have the loss of sales, but you're also closed by statute, partially or fully, you qualify automatically regardless of your drop in sales. So restaurants in Pennsylvania qualify for this credit no matter what, since they were closed by government. And they're still closed by government partially. Look at the chart for 2020, and if you think you can go back and claim that money, then you'll want to do the computation. A lot of these computations are coordinated with your payroll service. So some of the larger and some of the smaller payroll services now have programs where they'll help you walk through this program. Looking at the ARPA piece, this is for the new changes for 2021. It's now been extended through the 4th quarter. PPP borrowers are eligible. You get 70% of $10,000 of wages per quarter maximum. So you get a maximum of $7,000 per employee per quarter of a tax credit. And again, if your tax payments are not sufficient to absorb the credit, you will receive, through application, you can get that money to come back to you. I want to make sure everybody's clear on that. There's always caveats in the rules. One of the biggest caveats, and we're still in a little bit of flux with the government since they haven't clarified a lot of these issues yet, is family employment is excluded from these computations. So if you're the owner and your spouse, as far as we can tell, you count and your payroll counts towards the computation. However, we have a list of excluded relationships, and it's almost every other relationship other than spouse is included here. So what the IRS is trying to prevent you from doing is loading your payroll up with family members in order to get this credit. But any employees who are not related are qualify for this credit. There still is some discussion and disagreement on whether owners' wages are included in this computation. They are not excluded anywhere in the rules. It does not say that the owner's wages or the spouse's wages are excluded. So we are recommending to our clients that you make the application to include those wages to get this credit. The worst thing happens is for some reason they come up with some cockamamie rule later in the program that says owners are excluded and you have to give the money back. But if you don't apply for it, you're not going to get it. So our recommendation is certainly apply in favor of the business, not in favor of the IRS if there's a gray area here. And this is very gray right now. Many organizations have asked the government to just put all the other questions aside and just address this question only. And for some reason, IRS, SBA, Treasury Department has not addressed this question at all.
Yeah.
So
it's strange that they would list out all of the relationships that were excluded, and then the argument on why owners are excluded is because there's this obscure tax reference somewhere in a link to the excluded relationship details, and that is constructive ownership, which means if I own the company 100% and I have a brother, I am excluded because I am the sister of the brother who owns the company because I own the company. I think they would just come out and say owners were excluded instead of making us go down that rabbit hole. So hopefully they come out and make it clear soon, but that's the argument for excluding owner wages. There
is definitely bureaucracy involved here, and sadly, it leads to all these last minute changes. Just a couple of things on the Employee Retention Credit, ERC. Number one, it is the only program out there right now that's taxable. So if you receive a reduction in your payroll costs or you receive money back from the government, that money is taxable to you as a company. As it stands right now, if you remember back in 2020, PPP money was taxable at one time. Then it became tax-free after a lot of pressure was put on the government to make it tax-free. Hopefully you get the same thing here, but as of now, this money is taxable to the companies that receive it. The other caveat that you want to be careful of is when you apply for forgiveness on your PPP loan, you can't use the payroll that you use for forgiveness. The salary piece can't be used for forgiveness of PPP and employee retention credit. That same payroll can't be used. So when you go back, you want to compute your, here's a little step-by-step slide as to what has to be done first. So remember, the ERC is capped at $10,000 of wages per quarter. So if you have employees who are over that amount, the overage can be used for PPP forgiveness. PPP is a 1% loan payable over a 30-year period. Employee retention credit money comes back to you automatically. In some cases, it may be better to keep the loan if there's a small amount of loan left to get the full employee retention credit. We have a client we worked with today that's going to get $1.4 million each quarter in employee retention credit, and they were going to forgive, or they were not going to apply in 2 quarters because they can't use the wages for PPP forgiveness. Well, their PPP loan is $1.2 million. We figured they can get about $5.6 million in employee retention credit, and then part of their $1.2 million PPP loan will have to be paid back. The economics of the deal just make it so that, okay, keep the loan, pay the 1%, pay it off over 30 years. Look at all the money you got up front. So you have to be able to do that computation as well. And we said in the beginning, please consult with your advisors on this, and please make sure that your advisors are up to date with all the changes on these things. If you have questions about it, please reach out to us after the webinar, and we'll be happy to try to walk you into a program. But just so you know that the ERC program and the PPP2 program, they go hand in hand. There's a lot of work that has to be done to make sure you get first you want to get the maximum amount of money, then you want to get the maximum forgiven amount of money at the same time.
You don't get a do-over on your forgiveness application. So if you
Right.
submit it with all payroll costs and then you need them for ERC, you're going to hurt yourself a little bit there. So if you need to reduce the payroll costs to 60%, that's something you have to do before you submit. So if you have not yet submitted, just be patient. You have 10 months after the end of
Right.
the covered period, so there's probably time. And again, reach out to us with questions. And ERC, I have had countless calls where we just go through your receipts and talk a little bit, and I can probably guide you in the right direction
Yeah,
pretty quickly.
the PPP loans, despite what your banks are telling you, and the banks are anxious to get these things off their books, so they want to get them forgiven. They don't want to service loans that really don't bring them any money because you're not making any payments on them. They want to get you to do the forgiveness application. Just tell your bank no. You have 10 months from the end of your 24-week period, we'll call it, in order for you to do the application. Our PPP loan 24-week period ends October 15th. So we have until July to get our forgiveness application in, and that's when we will apply. Once we make sure that all of these programs have been exhausted, then we'll apply for forgiveness in time to get the forgiveness. We have recommended to our clients through this entire program, do not apply for forgiveness yet. If you don't have to, don't. If you're not eligible for any of these other programs, and there are no other programs coming down the pike, then you can send your PPP applications in. Just before we close, let's go back to this one here. There are some other things that are available to small business companies in distress. The Economic Injury Disaster Loan, EIDL program, was expanded on April 6th that will allow you to get a maximum award of $500,000 up from $150,000. Before every one of your businesses qualifies for this loan, if you haven't gotten it yet, I would highly recommend that you get your application into SBA. They are approving these applications and funding these loans very quickly. I have clients that got the funding in their bank before they even got the application approved. That's how the SBA is acting there. These are loans that have to be repaid. So there is an interest rate. The fees are waived. SBA loans have a 6-month period of forgiveness so that there's no payments for 6 months. So, but if you haven't done the SBA EIDL application, we recommend that you do that quickly because that program, SBA can close that program down at any time. But it looks like that's a program they're going to continue out through 2021 into 2022. So make sure that you're into that program. That's the end of our talking part. We do have questions in the Q&A. Again, here's the email. If you have questions and you want to send the questions after the webinar, please send them to cares@brinkersimpson.com and then go to our CARES website. That's part of our main website, and in that CARES website is all of the updated information through today. We try to update it daily with all kinds of programs. If you're in Philadelphia, there's grant programs. If you're in Delaware County, there's grant programs. So
and definitely follow us on LinkedIn. We are very active on there. Yes. I don't if you're on there. In terms of social media, we really get it out the quickest and most frequently there. So it's definitely a good resource.
All right, let's go. We'll answer the questions as best we can.
Let's do it. Okay, let's do it. These are his names. So Kim heard us asking.
Hungerburger. Okay. Yes. Cynthia's question is, does Brinker Simpson help businesses that need direct assistance with the RRF application? And the answer is yes. Of course, we haven't done any of them yet, but our restaurant clients are all on the landing strip, we'll call it, and they're ready to take off. We have shared the application with all of our restaurant contacts and telling them to get ready for it when this thing goes live. We suspect that within 2 weeks, it will be live, and it will be a shit show to get to it. There is a pecking order to this that minority-owned businesses, veteran-owned businesses, and women-owned businesses get the first bite at the apple here. So they're going to go first. When those applications are done, then the applications for other owners will be accepted at that point. So if you're a woman or minority-owned business or a veteran-owned restaurant, we'll call it, make sure you're ready because that is going to open first. That portal will open first.
Oh, that's not, no, actually they're not doing it that way. So
they changed.
everyone applies, and this is
Okay.
this is why SVOG broke down, because they're doing it this way there, and everybody applies at once, like a free-for-all, and then they will pick in each tranche of eligibility, whatever the receipts allocation is for that. So they'll choose based on your designation of that, of meeting that criteria. And also I read in the information released last night, if you have a person who meets one criteria and then a woman that are 25 and 25 and a different, that will work. You can kind of combine the different ownerships to get to 50% or 51% to meet those criteria. So if that's even something that might work for you, absolutely look into it, because there's not enough money for the program.
Okay, we had another question. Do you still recommend to wait to apply for forgiveness or go ahead and apply it, even if early, regarding the 10-month? We recommend that if you qualify for any of these other programs that we talked about, then do not apply for forgiveness, and make sure your 10-month period is not elapsing at this point. If you elected a 8-week period and you got your money last April, then you're up against it at this point as far as forgiveness goes. But extend your 8-week period to 24 weeks if you can, without any consequence, and then you're still in the program. I would not apply for PPP forgiveness yet. What if you got PPP and have not spent any? Can you return it and qualify for this?
It's a really very short time. I know last year that there was a safe harbor through May of 2020. You could return the money. I'm not sure what that is now. If you just recently got the money, there may be if you work at the Brinker, but I don't think so.
I'll we'll look at that afterwards, Roger, because we don't know. We've never been asked that question.
Usually there's lenders on here, but today it's just.
Yeah, we don't have any bankers on here, but we're going to check with our bank to see if that's possible. That's a great question. Yeah. If you've already got the money, can you give it back if you haven't spent it yet?
Yeah, it's unfortunate.
You could give it back in the old program. I know you could give it back. I don't know, but we'll find out for you.
Yeah.
All right, so we're down.
So we did that one.
We did Roger.
Still recommend.
Timing to take best advantage of both PPP if you already received the second draw on ERC. Since these are simultaneous, how do you suggest applying for forgiveness? What 24-week period can you select, and does it have to be close to the date receiving the PPP loan? The answer, I'm going to answer your last question first. So you have a 24-week period that you're going to use for forgiveness, and it has to be 24 weeks from the date that you receive the PPP money. So the process starts the day you get the money. You may not need all 24 weeks to get forgiveness. You can pick a period between 8 and 24 weeks, anywhere within that 24-week period. This is a great question, and this is what makes the computation. You have to be so careful with the computation to find out what are the best 8 weeks, let's say, to get forgiveness. Is it at the end of the 24-week period and I get employee retention credit for the first 16 weeks? That's possible as well, and that's why it's very important to do these computations, as you say, simultaneously to get to this answer.
And also, some people are making it more complicated than their situation even warrants, because the PPP is based off 2.5 months payroll. You get 6 months to spend it. So theoretically, by that calculation, you should have enough, but things change. And you can also use any week period from 8 to 24. So you're not mandated to stick to the 24 if 8 would be more advantageous for your situation.
Right. Are hybrid businesses, non-alcoholic beverage, snacks, grocery items like coffee beans eligible for ARPA?
If you can document that you have 33% of your sales are to the public and not wholesale, that would be the additional documentation that would be required for you to meet that, to be eligible.
Yeah, I think it's more of a grocery store here as opposed to a restaurant.
What do you mean?
Our grocery items like coffee beans. If you're a non-restaurant, if you're selling food to the public, that's a good question. We're going to have to we're going to find the answer to that for you.
Yeah, let's say if you're selling, I think if you're selling coffee and breakfast sandwiches and things like that, and then you also distribute coffee to grocery stores, I think that might, that's a good question.
Yeah, we'll find out on that one as well. are you taking new clients and how do you charge fees? Yes, we're accepting people that need help through this process, and we'll look at their individual circumstances and we'll give them a quote as to what we think it'll cost to get to the bottom line. And at the same time, we'll also give them an idea of here's how much money you're eligible for through the program. So we like to get information first from them that says, here's our payroll level, here's our program, here's our PPP loan, and then we'll determine whether or not we can help them get through the process. But yes, we are. Does using ERC affect the amount available through RRF?
No.
It does not. No, RRF is a separate program coming from the IRS. So, coming from the SBA, the ERC program is an IRS program, simply a tax rebate program. They're both separate from each other. 40% PPP forgiveness, cost of goods, general expenses can be used really. Yes, there's a list, there's an expanded list that came out in March that allows you a much broader list of items that are good for forgiveness of the 40% piece. So the 5 items that were in the original forgiveness have been extended. Accounting fees, IT costs, cost of goods, materials, supplies, they're all part of that 40% now.
The thing is, with the first littler list of expenses that were eligible, each subsequent release of information further defined those expenses. The recent changes say covered supplier costs, which does have some nuance that was released. Most of the newer ones, like the accounting programs, some people read it as only software related to accountants, which is probably, you have some nuance. Hopefully you don't need to get too far into it. The way we typically do it is try to use all the payroll costs that we can while maximizing the employee retention credit. And to the extent we need more, we try to lower it to the lowest possible amount that we need. And hopefully you have rent or some other really clear areas we can use to make the process as simple as possible. And again, if it's under 150, I would rather you schedule a half an hour with me and I will help you, because it shouldn't be that hard, and I can definitely help with that. I'm really glad they made the changes, because prior to that, a $125,000 loan would have the same process as a $2 million loan.
On the 941 forms are calculations for ERC forgiveness. Is that where we should be asking for forgiveness, and how is it calculated? Yes, that is the new 941 form. So there is a line on the 941 that you input your ERC computation, and that's how you get certain payroll taxes forgiven on the 941. The calculation is very detailed, and you should just reach out to us after the event, and we'll help you get in line.
Yeah.
If you have an outsourced payroll company, like Paycheck, ADP, Prime Pay, or any of those, they are helping their clients get through it. So
I'm going to caution that, because
right.
I had a call with one of the bigger payroll companies today, and they tried to connect my client to a tax credit company who wants to charge them 15% of their credit. So they're now trying to cross-sell with credit companies, and that is way too expensive and not what you need to do. You're unlikely to be able to do it yourself without having a lot of anxiety. We definitely offer the service. Your accountant might offer the service, but I would not work with a company that's charging a percentage fee. There's no reason to. If you're doing research and development, obviously that works better, but not here.
Right.
I agree. I was put off by that today. So I think the best you can do is have your receipts ready year over year, reach out to us or your accountant. And then if you are eligible now, you want to immediately let your payroll company know, so that by your next payroll, they will reduce your federal deposits to 0. And you will do that every payroll. And whatever is left over, your ERC will typically be more than your federal tax deposits for the quarter. You will request the difference, the refund, when you file your 941. But the quickest way to get the money is to reduce your cash requirements on your payroll, right? Who doesn't want to do that? So the quicker you get that information to the payroll company, the better position you're in. When you go back and amend these 941s, I don't know if you've heard, but the IRS is months and months and months behind opening their mail. And at this point, we have to actually mail a 941 to the IRS, and they have to mail you a check. So I'm telling everybody to expect 6 months for that money. But we did speak to the IRS on Friday, and they said it's probably closer to 2 to 4 months.
We'll see.
Yeah, hopefully.
The question is, only PPP has to be deducted for RRF, so no double dipping. That's correct. Other programs received do not get deducted from the RRF. ERC, for example, that's correct as well. It's just the reduction in sales less the PPP money received. That's the computation. Is RRF grant money taxable? Yes, it is.
Tax-free.
Oh, no, I'm sorry.
It has the same attributes.
I'm having acronyms. Yeah, I'm having acronym meltdown.
ERC will be.
Yeah, ERC is taxable. The RRF grant money, as it states right now, is not taxable.
Right.
Sorry about that, Kim.
We don't know in terms of state yet, but you won't know that for some time. And Philadelphia, you'll probably be waiting till next April to get that answer. Maybe not. But for federal, which is the biggest bite, that's treated just like a forgivable PPP. I think we've got them all here, but what do you think? Because Lauren's taking the ones from the chat and bringing them over.
Okay, let's look at our sheet. Okay, some of these questions were answered. We did that. Okay. All right, so I think we have all the questions answered at this point. If there are any more, send them. Again, you have our email addresses here on the screen.
Oh, but somebody's asking about that. We can give them information about that.
Yeah, do you have any information on the status of the CHIRP grant? The CHIRP grant is a state program that is reimbursing restaurants between $5,000 and $50,000. We have information on that on our website, and we also have information available for you. If you just want to reach out to us after the program, we'll send you the CHIRP money. That's being run by the counties, from the state to the county, to the restaurant owners. I know in Delaware County, the CHIRP applications are very, very slow at this point, so there's still money available for that.
I did see one other question. What's the website to apply for RRF? If it's through the SBA, you'll go to sba.gov. They will probably establish a portal. There is a sample application available that came out over the weekend, like we mentioned. Lauren, our marketing director, Lauren Contino, will be sending that with the slides after we send. What are we doing here? Oh, after the send.
After we're done.
Yes. So you can go from there, and actually, if you register with the on the SBA's mailing list, you'll probably get good updates for any program.
Yeah, again, be very close to your bankers right now, and be very close to your accountants and advisors, because they have to be on top of this in order for you to get the money. This RRF money is going to be competitive. Mm-hmm. So it's going to be a first in line, first in time deal here. So make sure that you're ready when these applications come out, and do reach out to us and we will help you through it. Thanks again. Please send your questions to these if you have any, and good luck getting through all this pandemic. We always say we're in this together, and hopefully we've been able to help you guys move forward through this. Thanks again.
Thank you.